Yep. What it do? What it do? Right. All right. Oh yeah, yo, digital currency is the wave. You hear about the ECB, what's her name, like they're launching, I mean, I already knew this was coming, but they're going to be launching their own digital currency and stuff like that, and they're talking about it's going to be free this and free that, and it's going to be much faster, da da da. And it's like it's just a way of them having more and more control, bro. Like, yeah. And mm-hmm. Yeah. No, it's they tell you to do one thing and then they do the complete opposite and whatever. It's just like, yo, like when they raised the case against XRP, it's like in 2017 the government had heavily invested in XRP. So then when like I see all these, puppets on CNBC talking ill about cryptocurrency, and I'm just like, do people not realize that this is the future? It's like it's only it only makes sense in the next in the natural progression of human society. Like we're in a very technological age. I mean, now we're selling virtual land and whatever. And prior to that, it's like it's yeah, bro. Mm-hmm. Thanks. Mm-hmm. Mm-hmm. Yep. Mm-hmm. Yep. I'd be like, oh snap. I'll be like, yeah. I'm like, well, y'all figure that out. I'm gonna be over here chilling. Sam Bankman, Bankman Fried. Okay. Yeah, it went into politicians' pockets via Ukraine. Aside from George Soros. Yeah. Nope. Mm-hmm. Nah, bro, you can't trust, man. It's like every time they tell you like, oh, don't do this, or they're highly against something, it's like you just gotta follow the money, man. And when you follow the money, it's like, nah, like y'all bullshitting. Yeah, it's like nah. And then if you just do research, just like you just do some research and you start seeing things, it's just like, yeah, you can just act on what you see and what you come across. And if you're wrong, you're wrong on your own merits, and you're not wrong because you listen to someone that's being paid to feed you certain BS. Yeah. And so no fail. It's all good. It's all good. Right. Right. let me go make some accusations, and then I'm gonna be the person to verify those accusations. And it's like, and you're gonna tell me nothing smells funny. Yo, and it literally baffles me, like how dumb, deaf, and blind a lot of people in general are. It's just like, do you not have eyes? And it's crazy because like a lot of them cannot think for themselves. It's like, how can you not think for yourself? How can you not see this? And then it's like, and people don't see it until like you give them a scenario that's relevant to them, right? Like I was saying, like how that person, I was just like, okay, well, let me come in your house and just take over everything and kick you out on the streets and whatever. And then if you try to, step on the lawn, I'm gonna shoot you and whatever. And then, and then I'm gonna call you the terrorist. And it's just like, does that make sense? No. Just like when they like back then in the was it like in the Iraq the Afghanistan war and Iraq, where Cat Williams said it better, right? It was like, he was like, what the hell is an insurgent? Like, it's like, you see how like they play on words, and they give these names that it's just like, as an individual, it's like you don't really understand, but then it's like you don't want to look stupid, so you just go with it. But then it's like, yo, like, oh, today we killed 9 insurgents. What the hell does that even mean? You know what I mean? It's like, and it's just ways of that they dehumanize people, so it makes it okay to to get rid of them. Yeah. So, ish. Yeah. 6 minutes, 6 minutes. Yeah. All right, cool. Yeah, so I'm gonna do some analysis real quick. Take a look. One area, I mean, that I for sure would like to possibly take a short is if we get back below 43.39. But yeah, if we can get back below that, or maybe I'm gonna be watching the 5 minute to see if we top out maybe 43.70s, I want to say. Let me check out the bigger time frame. So like around 43.70, we'll have some resistance, but damn, yo, this drop is gonna be massive. All right, 5 minutes to go. 5 minutes to go. Good morning, ladies and gentlemen. Gold with the drop. Goodness. Yep, yep. Yeah, so right now, Dow Jones and ES are both pushing, making new highs. Nasdaq not so much. So let's see, what's the news at 10? Let me check my FX book. What? Solid. All right. Okay, my FX book. Let's see what we got at 10. Yes. S&P Global Service. ISM. Okay, so we have ISM in 32 minutes. And this thing is still ripping. Dang. All right, still pushing. So if you take a look at the 4 hour time frame, we'll see if we get rejection here at the 4370 area. And at this point, I definitely don't want to take longs. Just again, looking at the 4 hour, highly overbought. The daily is approaching overbought territory. So I'm just going to be patiently waiting. If we pop one more time at the open and then we retrace to create a lower high, I may scale in. Gold with a drop. Damn. Can we get something similar with the markets? Like, bro.
Dance before we get to an opening bell block. Do you remember Block by Jack Dorsey still?
The artist formerly known as Square.
Correct.
Jack Dorsey did an absolutely terrific job last night. Amrita Ahuja, who's just terrific CFO, with great commentary. David, this company is back. There's just some great EBITDA. They're going to buy back stock. They are going to cut headcount, so they're actually going to be more efficient. This is the year of efficiency for Block 2. David, these companies all have to get together. I mean,
10 seconds to go till the open.
Merge with Upstart, we should merge with PayPal. There's too many of these, but this company distinguishes itself with some very good numbers. Cash App doing well. Some people think not well enough. I do. EBITDA. I know it's adjusted EBITDA, which I know always rankles you.
Well, you gotta be careful with it. You gotta
We
be
are
careful.
open.
Yeah. So I do want to point out, David, that this company stock is up very big, but it's probably going to go up more because the street always loved it. They love fintech. They can't get enough fintech.
True. Although, again, to be fair, the stock has been far, far higher. Right? I mean, I look at a 5-year. Ooh, where did it peak? $200.
Oh, no, it's cost people a great deal of money. Yeah. A great deal of money.
See if we can get under that 43, 42.
Doing the honors after joining Jim last night. As we are above 4,300 this time, Jim.
Bit of a short squeeze. I remember it is Friday. People tend to be worried about what's going to happen over the weekend. The Middle East is very heavily. Interestingly enough, the only company that really is sympathetic way was bookings, and it should, in some ways, it just mentioned it, kind of like the other day was Estee Lauder, but Estee Lauder, like I said, is Joe. There was a piece of research that came out of Estee Lauder, and it was just called Uncle.
Still pushing, so still waiting.
We had another Uncle today, people using that.
Yeah. Nasdaq is catching up.
Mr. Faber,
No, you're right. You're right.
and I found there's 18 people that watch Morning Show, not 17. You're way
Jim, there's going to be a lot of headlines that say Goldilocks. You think this jobs print reflects that?
Yeah, I mean, this is kind of within the confines of knowing that we have too much debt. This is kind of the slowdown that you want. You still have some growth. The areas where the slowdown are affecting are the areas that were the hottest, which is Home Depot, which is home. I referenced Florida decor, which could hurt Home Depot just in terms of read-through. That mortgage rates went up so high that they did cool housing. And we're beginning to see properties for sale. And by the way, in New York, there's a lot of properties for sale. And what I'm saying is that had been the area that was up 40% since 2019. Powell trying to bring back everything to where it was in 2019. Food has really come down. The Costco numbers, by the way, which no one talked about, the monthlies, show definite, not disinflation, but a dramatic slowdown of inflation, and that matters.
Yeah,
A lot to
global food index is 2.5-year low.
Oh my! I mean, I had Anko on the other day, David. One of the reasons why the farm equipment companies are doing so poorly, they use some good technologies. That hey, prices are down so much in food, and yet the war in Ukraine, which was 13% of our calories in the world, continues to rage.
It does.
Yeah, so it is. The price of food has come down dramatically.
Guys, I want to talk about Paramount, which also reported numbers after the close yesterday, the stock of which is having a decidedly good morning so far. It is early, but it is not often that we've seen this kind of surge in shares of this company. Of course, it was only a few days ago.
So far, Dow's seem to have been topped out.
It's now once again well
I'm
into
gonna
the
wait for
eights.
ES to do the same. So I want to see some 15-minute red candles on ES. And again, I want to see a lower high being formed on the 15-minute or the 5-minute time frame. If we can possibly maybe get a close, a couple of 5-minute candles close below 43.59, I'd be interested in possibly scaling in.
There was $377 million in the quarter. Now we don't know how much that was benefited by the fact that they're not spending money. Remember with the strikes on new content. So some of that is just deferred spending that showed up in a more positive free cash flow number.
Yeah.
It was
Yep.
overall content
Yeah.
marketing
24
spending
minutes in.
got tighter. They tighten things up as they have to. When you're under the stress that a lot of these companies are, you've got to tighten up. They did. Again, they also said DTC losses will accelerate in the fourth quarter, but overall for 2023 will be lower than they were for 2022. That was not anticipated. Remember, this was supposed to be the peak year. Then things were supposed to get a lot better when it comes to losses.
Bro, this downside, man, the gap from Sunday. Yeah, once we get a confirmation, bro, I'm loading up and I'm gonna swing at least maybe 4 contracts down to the 41.36 area, which is the gap from Sunday.
That company. But coast is not clear.
No.
For these companies, it's a tough road as your linear business continues to decline at a fairly rapid rate, and you really have to cut losses in DTC. But the growth was good.
Now, why can they have unbelievable sports?
Say
They
again?
do very well in sports.
Yeah.
But they have Champions League, but or obviously a very good NFL contract. And people don't think, you know what? They've got some prized properties that actually generate some very good ad flow. Why are they not talked about? Is that because it would only be brought out in some sort of merger that the FTC wouldn't allow? Because their properties are very strong.
It's true. They have good IP, the way they like to talk about it, although some of it, they don't fully own. I mean, Mission Impossible, you got Ellison's son. Right. It's like,
Ellison?
It's not that. Yeah, Larry Ellison's son is the
For a second
big
there,
producer there.
thought you.
Yeah.
Yeah, every day it was a tough day for Ellison. Actually, Larry Ellison, Oracle's doing quite well.
Oracle is doing very well. On the call back, you also talked about that deal between Charter and Disney that we focused a lot on, of course, that allows basically for Charter to allow its subscribers to access both the direct-to-consumer and supported platforms at the same time, or because they're buying the linear channels. Here's what backers had to say about the deal as it relates to Paramount.
As we go forward, it is possible that some of our partners will embrace a strategy that more tightly integrates D2C into the pay TV bundle. And we expect that if they do, the bundles would have many of the same advantages we've observed in the various hard bundles we've deployed internationally, namely a dramatically lower cost of acquisition and improvements in streaming churn, and it may improve TV ecosystem trends as well.
Yeah.
Right. The idea there being that maybe actually the video business hangs on longer with deals like the Charter and Disney one that was struck. That's why that was an important deal.
Do you think Roku was talked about enough? They're doing a lot of things right. Obviously, it's still not making money, but Collier's got there. They seem to have their act together. It's very impressive.
All right, so Dow is turning.
I don't know. I mean, look, I think all this area.
30-minute time frames looking pretty decent. Couple wicks on the top side on the Dow for the 30-minute time frame. Looking what seems to be a
does
a
matter
reversal candle.
tremendously. I do
So
think
now
that
I
it's a
just
map
need
that makes it
either
so that
NASDAQ
at
or
analyst
ES to
meetings,
confirm.
they're
It
doing
probably
that's a
might be
SPAC. It's
NASDAQ
actually
and
maybe
ES might be the
those are
lagger
few and
today.
far between.
Guys, I want to do a quick update on the sale process of U.S. Steel, just because I have to focus on it. You know what?
The original X.
Yeah, this is still going. I think fairly well. There are going to be a lot of site visits coming up for the prospective bidders for U.S. Steel, and
Yep.
you assume they're going to get this thing done by the end of this
Right
month.
here,
Remember,
this right
December
here,
1 is when that
beautiful.
standstill with Cleveland Cliffs expires, so you want to
Ideally, I want to see the Dow break below 33,974. And then let's take a look at NASDAQ. NASDAQ run the highs one more time. I would like to see NASDAQ close below 1515 or even 15,000 even to give me a better gauge that okay, we're ready. Overbought, looking like an M pattern.
A feeling that it's a must-have in some ways, but there is not an insignificant amount of continued interest in this asset as this process moves forward into what will be final bids. Let's call it the next couple of
And what
weeks.
does it say about the economy that you could have such fervent bidding for a steel company, which would be the last thing you typically would want to do if there's a real downturn?
I know, but it is kind of it's a unique asset.
It is
just the
unique.
view, and it's not like it's going to come around again.
And Cleveland Cliffs, I know it's a controversial stock, but Don Coles, he's paid down a lot of debt. He's doing a lot of things right. The quarter was excellent. Initially, the shorts were pressing it down 15. I thought the quarter showed you the power of combination that most people did not believe in. They can pay down debt. Their cash flow is incredible. They do own the auto market. I was concerned about a longer-term strike, but they have the firepower to get it.
Looking a little bit better. NASDAQ is looking good. Check out NASDAQ on a 15 and 5 minute time frame.
We're a good steel maker now. Nucor's the number one in the world. And dare I say that the tariffs worked? You needed to stop the dumping.
Need follow through. Need some kind of follow through.
I'm telling you, I like this group. I like infrastructure. I think that Caterpillar was brought down by bears who are going to prove to be wrong. Caterpillar's now up for 3 straight days. It's almost back to where it was when we reported the so-called horrible quarter, which really wasn't. The industrials, whether Ingersoll Rand, David, Parker, Hannafin, these companies, Carl, we are so back when it comes to the industrials. But people, they'd rather just talk about the week 4 days of Apple, 4 days bad, and the 17 people who watch you.
The morning show. Let's get back to the jobs number. We're joined this morning by the acting Labor Secretary Julie Su. Madam Secretary, great to have you back. We've been over the numbers a few times this morning. Is the White House ready to pass a softer job market if it does ease inflation?
Hi, it's so good to be with you. Today's jobs numbers reveal 150,000 jobs last month, bringing the total since President Biden came into office to 14 million. To your point, this is actually something that over a year ago the president said if we started to transition away from the numbers that we were seeing then, 500,000 to a number closer to 150,000, that would be the sign that we're entering the stage of steady, stable growth. And that's exactly the number that we're seeing this month.
Got some forecasters this morning saying pretty likely here these numbers get revised lower. Every month has been revised lower this year. Unemployment maybe cracks 4. The household survey was pretty weak. I wonder what you make of that.
Well, I would say, so we look at the monthly data, which is 150,000. Like I said, President Biden has said now for over a year that would be the sign of the kind of economy that we want, moving away from rapid growth post-pandemic to steady, stable, strong, sustainable growth. But the other thing is the 3-month average, even taking into account the adjustments, is 204,000. So again, signs of a strong economy at the same time that we continue to see an unemployment rate that is less than 4%. Many people predicted we would not get to under 4% for many, many years. President Biden beat that.
Still going. All right, here comes the 70.
21 months of that is the longest stretch in over 50 years. So low unemployment with continued
We're
job
getting
growth,
close to
people
4370.
in the labor market looking for jobs and getting them. We think these are all good signs of what Bidenomics means for the country.
Bidenomics,
Kramer, we're trying to figure out the impact of the tremendous amount of immigration in the country. I'm not trying to hit the third rail of illegal or legal, but we did have a dearth of new workers for a long time. Are you seeing any integration of the workforce from people who are, of course, legal aliens actually getting jobs, but also making it so that there's
4370
wages,
printed.
therefore making it so that the Fed can one day cut rates rather than raise them?
Yeah, so I'm glad you mentioned the wage growth, right? You know, part of the president's approach to this economy is that we can do right by workers at the same time that we, benefit employers and grow the economic strength of the country and our competitiveness. And we have seen wage growth too. Nominal wages have gone up. That's especially true for low and middle income individuals, which is, about everybody getting a fair share. And I think the tight labor market, which is also not an accident, but a feature of strong economic policies that favor workers. We have seen a need for workers from all across, in every single community.
So
That
much
includes immigrant
divergence.
communities. We've also seen a return in terms of immigration since the pandemic. So all of these things, yes, factor into what we see as an economy where workers do well.
We watched the president, of course, on the picket lines with the UAW, encouraging the union to stay active. Now the UAW president's talking about going after what he calls the big 5 or 6 in the next labor round. Would the White House encourage the UAW to start organizing non-union shops like Tesla?
Right. So, we believe that the future of the auto industry, especially in this moment where there is transition going on,
This is looking like it's going to be another slow morning.
And make sure that we're building a sustainable climate. Is that can be a future characterized by good middle-class union jobs. And I think the outcome, these are only tentative agreements at the moment. They have to be ratified by the members, but the UAW's historic efforts at the table shows that there is a path for good middle-class union jobs to characterize the future of the industry. And that is certainly consistent with the president's vision and his desire to see, to be the most pro-union, pro-worker president in
72
history.
printed.
Finally, on labor force, a bit of a flattening out on participation. That's one of the flies in the ointment this morning as the street reads the print on the jobs
15
number.
more minutes.
Do you see that number going markedly higher, and why do you think it's stalled out a bit here?
Yeah, so those numbers continue to be high as well, right? If you look at historic trends, they remain high for women. So the employment rate for women in this country for 7 months now has been the highest on record since, 1948. So it does show that people are coming into the job market, they're looking for jobs, and they're finding them. And that is especially true for prime age workers. Now, we do have an aging population, and so, of course, that population, that labor force participation rate will be different. But for prime age workers, it continues to be very, very strong.
Finally, on remote work, I'm wondering if the White House has been impressed with some of the Castle office swipes, or at least the degree to which people are returning to downtown, whether they are in the office or not.
Right. I think this whole, post-pandemic, what the workplace is going to look like continues to be, in some ways, we're still in that transition and adjustment to see what works. How do we take the best lessons of, remote work, but make sure that people are still, able to work in common spaces, work in downtowns where we want businesses to be able to reopen and to be able to thrive.
So just again clarify, I'm not entering yet. I'm waiting. This 1 hour chart is looking too strong. I want to see some red candles, and as you can see on the 15-minute time frame, ever since the report, there hasn't been a single red candle print.
Shedding some light on the print this morning. Good to see you.
You too. Thank you so much.
So just like yesterday, we might get it around 11 before the London close, where it had dropped like a quick 10-12 points.
Let's say all-encompassing view where labor and management can win are appalled at this. To want to go be the most pro-union president ever is a very divisive thing, I think. Because I do believe that companies like Ford, GM are trying to make a transition to EV, and they really can't have a shotgun to their head. you can't tell them they must go to EV at the same time they have to pay the workers a huge amount. I think you have to. I think that when the president came to the picket line, I was shocked that he didn't pay a little visit to Jim Farley and say, "Listen, maybe we can work something out that is good for the workers." Instead, he was very adversarial, and I was very disappointed by him.
Well, I think he's unwinding 30 years of capital swinging to capital rather than labor.
I think we tried to get 100 years of companies not doing fossil fuels, and it was, to me, the more important imperative was how to be able to make it so that you can continue to afford EV, and I didn't get any sense because if we go to batteries, the imperative can be met. I think we're going to because there's just not enough money, and I thought that was disappointing. The climate was sacrificed upon a cost of 25% increase.
How impressed are you? Tom Lee's got a phrase going called the baby rally that he expects to develop here. Just given some of the prints that we have still coming.
With diapers? I mean,
yeah, like a baby.
Diapers, I don't know. I was not a good changer. I do think that, and I'm trying to tell this reference to my colleague David, that Apple is the one to watch. And they couldn't bring it down. They tried. They did everything they could. And their East of Eden game plan failed. Got it. I try so much, Carl. I've used so many book references.
You do. I know. I am familiar with that title.
Sure. What's wrong? Well, because I'm trying so hard. What do you? Trying to get you, trying to get you there. Do a little classic reference books. I mean, you wouldn't even do it. I think you know the president is Steinbeck. Tom Jones. Tom Jodes.
Jones, yes.
I saw. You know that Tom Jodes. You know he's.
I'll be there.
Yeah, he's disgusting.
Still to come.
Grapes of Wrath of the White House.
An exclusive with Richmond Fed President Barkin. We'll hear what he has to say about the jobs number, inflation, a lot more.
I'm
Watch
tempted
bonds,
to
of course,
possibly
10-year
scale in with
around 4.5.
1 micro.
Equities, got communication services, banks, everything but energy is up, and the VIX close to 15.
Thank you, man. I appreciate that. Okay. Could this be it? Can we get a massive drop? Every little pullback is bought right back up. What's his name? I'm here like is it Michael Burry? Home dude that's like short billions of dollars on the market. I'm over here like, yo, like, can I get some kind of you know what I mean? Something to be like, yo, like, give me confirmation, bro. Yo, they really are, bro. They really are. It's like, bro, give me this sauce. Yeah, I mean, just the other day, like, I mean, when beginning of the week or last week, when the market was down below was it 41.30, he was up hella big. But yo, that's the thing with swinging. I don't know. I would hope he would, because I'm like, bro, use up a bill. It's like because this fluctuation to go from being up $1 billion to then like, yo, possibly being back, you know, maybe up only maybe a couple hundred mil, bro. Damn. Yeah, I agree with that. 7 minutes till the report. Come on.
Their greatest potential.
Stack on pace for the best week since July. Look at some of the week-to-day gainers on the NDX. Legion, Lucid, and Sirius. Further down the list, it's a treasure trove of familiar names: AMD, Qualcomm, Adobe, PayPal, Micron, and Starbucks. Dow's up almost 190 on this Friday. Don't go anywhere.
A whole week of just straight buying. Could be. Give us something, bro. Like 15 minutes overbought, 30 minutes overbought, 1 hour's overbought, 4 hours just massive, and it's the 4 hour. Okay, and the daily has now reached overbought. Come on, what? We gonna get our drop. Just gotta patiently wait. So now I'm gonna set an alert if and when we get below 4360. Below 61. Up 40 points, bro. Oh my gosh. Watch next week recession be back on the table. Oh. They literally be flip-flopping week to week. Mm-hmm. Yep, yep. Come on, man. Oh, they are? Nah, I didn't hear that. Sheesh. But you don't hear none about it. We work, huh?
Good.
Let's get to Jim and stop trading.
Yesterday, Fortinet reported just a miserable quarter. They blamed the slowdown in the industry. That is so false. It's palpable. I spoke to Clorox yesterday. It's the exact opposite. Buy Palo Alto Networks and CrowdStrike, which also owns Palo Alto. The fact that Fortinet says things are bad in the industry, no, it doesn't protest too much. Broody. The Caesar, Julius Caesar.
That one I got. That one I fully got.
The fault is in Fortinet, not in the stars. Okay?
As for tonight,
Yeah, I got Hallie on, which is just a stock that has not necessarily been a winner so far. And then I have AEP, which won big yesterday because it's a bit of a interest rate play. A great utility. What a fun show, guys. I want everyone to have a good weekend. Dave is going to catch up on Paul Marks, who's one of my absolute favorite heroes, Paul Marks.
Paul Marks
From
the morning show.
So, and I think that Tim Cook disagreed on the 17, just for the record.
Just totally threw me under the bus with Tim Cook.
Yeah, the M104. Do you know the M104?
He just did that.
Right on the M104.
Jim will see you at 6, Mad Money, 6 p.m. Eastern Time. When we come back, more reaction to Apple's results and guidance, plus an exclusive with Richmond Fed President Barkin. S&P 4360, back above the 50-day for the first time since mid-September.
How do you recover? If you've blown up several accounts, you want to take a step back before you even purchase another one. So take a step back, couple days, a week or two off. Go back to paper trading, do some back testing. If you're able to look at the at your journal, like if you were journaling while you were taking those trades, you should be able to go back and see, okay, you took these losses, why? What was the reason you took the loss? Did you enter the trade too soon? Did you over leverage and got shaken out? Were you revenge trading? What type of setup were you taking? What was your risk to reward parameter, right? Because I've noticed a lot of people, they may have some strategies that they're implementing, but they don't have good risk to reward parameters, and they don't have good position sizing. And position sizing meaning that if you have a certain account size, there's a certain amount, there's a certain position you can take without, really hurting the account. So for example, like if you're trading a 50K account, you shouldn't really be trading the minis. You should be trading, 2 to maybe 4 micros, right? Because now it becomes a bit more manageable. So that would be how I would say if you've blown accounts. Have I blown accounts before? Yes, I have. And when I do, I take a couple of days. I go back into my journal. I look and I understand. Okay, why did I do that? Oh, because I was over trading, or because I revenge trade, or maybe because I just wasn't in the mental space and I kept forcing trades. Oh, new high. Okay, data's out and whoop. Alpha still pushing. Don't do that. You too. Then you pass the mindset. Yeah, you gotta remove. Listen, there's no hope, and there's no hopes in holding stuff in the market. You have to accept when you're wrong, and that comes with you having a certain amount that you're willing to risk per day based on your account, right? So if your account is, for example, um again, like on a 50K account, let's say per day you only want to risk 350 or $500. It comes to a point where you're just gonna have to accept, like, okay, you know what, I'm wrong, I have to cut this out, because you have to preserve capital at all costs, right? And you have to stay within the parameters. The market is always going to be here, so there's always going to be opportunities for you to make money and take trades. Sitting and bag holding, unless it's, your own personal account, which even then I would still say, like, you would want to cut losses quick and just reassess the trade and then come back. Come on.
Here into the trading session. Here are a few big movers we're watching. Apple under pressure after posting its 4th straight quarterly sales decline. Its holiday forecast also missing estimates. We're going to discuss what's ahead for the stock from here. Shares of Expedia, though, are soaring right now. The company beating profit estimates, saying it sees resilience in demand for travel. Expedia also announcing a $5 billion stock buyback. And then watch the regional banks. Talk about relief. They're on pace for a 5th straight positive day for the first time since July. On pace for their best week since November 2020. Saw Bill Gross, formerly of PIMCO, on last call last night saying he's a buyer.
Indeed. Meanwhile, the data's not over yet. ISM services are out. Let's get to Rick Santelli. Rick?
Absolutely. If we're looking for numbers that may move the market once again, there's some surprises here. ISM services for the month of October, 51.8. That is the weakest level since May of this year. 58.6 on prices paid. That is somewhat in line. Follows 58.9. 58.9 actually was the highest going back to April. And if we look at the employment front, After having a weaker than expected jobs report, this one is really weak and it fits right in. 50.2. That is the weakest since we're under 50, and that was May at 49.2. And finally, on the new orders side, do remember these are all on the service sector.
go.
New orders actually
Okay.
much stronger at 55.5. That's the best
Keep
level.
it going. We need to get under. We need to get under 43.60. How are you
We
able
see that
to
interest
finally
rates have
take the
stabilized
step?
just a little bit here at a very, very big level, 4.5%. We've been as low as 447 and currently at 453. Do keep in mind, we settled at 484 last week. We're down 31 basis points on tens for the week. Sarah, back to you.
Yep, it is quite a jump in bonds and a big fall in rates. Thank you very much, Rick Santelli. And by the way, the services number just adds more fuel to this. The market liking the numbers that are coming in weaker than expected, as long as they're not pointing to a recession. And I think that's the story with the jobs numbers today. Just to review some of the highlights, and it was a weak number, 150,000 jobs added. That was less than expected. It came with, and I'll just add a few more things here to show you the labor market is weakening. 101,000 revisions lower over the last 2 months, so negative revisions there. Unemployment rate ticks up to 3.9%. Of course, that's negative as well. And it didn't come with a higher participation rate. In fact, the participation rate actually declined a touch. First time we've seen that in a year. You can go through some of the other internal metrics like private payrolls. They improved just 99,000 compared to 246,000 in September and more than 100, almost 150,000 that were estimated. And then David, manufacturing jobs we know were impacted by the strike. They quantified that 33,000 of those job losses out of the 35,000 related directly to the strike. But even if you would have added those
break
back
60.
because now
We
the
need
strike
to
is
break
off,
60.
it's still a weak number and points to, I don't want to say finally, because it's not good news for America to see higher unemployment, but finally because it's something that investors and the Fed and everybody else were expecting to happen for so long. And now it does feel like it's happening. And the verdict is the Fed can really be done, which we got kind of hints this week that it wanted to be done anyway.
Right. And does this influence that even more?
For sure, it influences more. And I would add it to the ISM number we got this week on Wednesday, which showed a lot weaker manufacturing. And I would add it to even the services number, which, services have been the part of the problem here of where Americans have been spending and why inflation has remained elevated. And this is really all about targeting weaker inflation, not a weaker economy. But those two do go hand in hand. So if we start to see the weakness in economy without falling off a cliff, that's why people are saying this is Goldilocks, and it's actually good news for the markets.
We had the acting labor secretary join us talking about the normalization of job growth, essentially, and that being a good thing and something they've been focused on. Of course, if it had been a much higher number, they would have also been very happy
I'm
with
still
that.
waiting.
No, they
Yeah, I'm still
celebrated
waiting
high
myself
numbers, but on
too.
the lower numbers, they say we're reaching more
I want to
healthy
see ES break
Which means
below
inflation, to your point, is will start
43.60,
to come down.
and then maybe
Wage growth,
possibly
anything
another
there?
pop
It was
to
lower than
create a
expected,
lower
and that's good
high,
to see, too, for the
or
Fed
just a
and for
follow
investors.
through
0.2%
before
was
I
lower
get
than
in
the
a notch
0.3%
trying to get
expected and continues to
caught up
point
like I
to
did
a
yesterday.
cooling off on wage pressures, which is something the Fed has been very concerned about. On top of
still
Powell's
looking
commentary this
better.
week that, he feels good about what he said is the progress on wages. Guys, usually we have really good data, good economic data, and then I point out some of the company negativity. Today it's kind of the opposite. It's the negative data, but the company commentary is actually quite strong, at least when it comes to the services part of the economy. Live Nation, of course, which owns Ticketmaster. We know people have
There
been
we go.
spending
Oh,
big
she's
bucks
picking up.
on
She's picking
concerts.
up.
That was confirmed in the commentary from Live Nation as well. The CFO says, if we look at our Ticketmaster platform for the month of October, ticket sales were up again year over year relative to last year. They were up double digits in North America. So we're seeing no sign of weakness.
Liberty Company, by the way.
Yeah.
Check that out.
I'm gonna try scaling in
Yeah.
1 micro
We can talk
Now we're
on
gonna have to talk about it every day.
NQ
We will. I'll be happy to talk
Thursday
about
the
Formula
16th.
One as we
at
try to promote what will be a great documentary
15:098.
next
See
week.
if I can get that
Any
filled.
other, any other commentary? Sorry.
Yeah.
Commentary that caught your eye?
Well, Expedia, because another part of the economy where people are spending on
All
travel.
right, I'm
really
short.
haven't seen anything on the consumer
Nasdaq
side.
at
That's what they say. We keep looking,
15,080,
but there's definitely nothing
98.
obvious.
Just
And
a
you have to
micro.
squint really hard.
So I
And
want
look, by
confirmation
sub-region and cut it by
before
price
I
point,
add
a lot of things to really see
the
anything
actual
noticeable
mini.
in terms of a slowdown. Starbucks
see.
also, I thought, was very
Expedia shares are up dramatically. We didn't hit them in the last hour, so I'm glad we just hit that.
Yeah.
Yeah.
and Booking too. Strength, not a sign of weakness. Starbucks too. You know, consumer demand for us remains strong. We're not really seeing any change in sentiment of our customer base at this time. The real weaker parts are in the industrial economy. Maersk, I don't know if you guys highlighted the big shipping company. That's where you hear the new normal we are headed into is one of more subdued macroeconomic outlook and thus of soft volume demands for the coming years. Prices back in line with historical levels and inflationary pressures on our cost base, especially from energy costs. That's where you hear the more cautious commentary.
Sarah, I want to just rewind to Monday and go through this week. I mean, we've
Yo,
got a
if
lot
this
of favorable
if
data
this
points for
15-minute
the
candle
equity
on
market,
ES can
vis-a-vis
close
well.
as a
10-year
bearish
just
engulfing
dramatically
candle,
falling
meaning we get a
in
close
yield
below
even this week.
It's really- it's favorable points for
43.68.
bonds.
That is going to be
That helps give
solid.
equities some relief, although there
For
was
the
some good earnings sprinkled in
43.
there as well. But yeah, this week, I would say the highlight, which is crazy to say, were some of those financing and refunding announcements from the Treasury.
Yes, we had
showing
news this
that they're gonna
morning.
issue less
Guys,
for longer.
be
That was
do
such a
be
relief.
sure
That
to
almost
get in the
blinded
habit
everybody
of
at the Fed when
taking a
today
look at
those
my
less.
FX book.
No,
My
but then
FX
the
book is a
Fed is
website
friendly to
that
the
gives
markets
you
as well.
all the
Powell
economic
said,
data
hey, that extra
being
jump could be
released
still,
worldwide.
which is the
They
answer
have an
rate hike
app,
potentially in
okay?
December.
I
And
posted it
then the data
before.
points,
The
a
app
little bit
looks
weaker.
like this.
Manufacturing, services, and jobs today all adds up to quite a bond rally. We were at almost 5% on the 10-year on Monday.
Right there, see?
Now we're on 4.5.
It's amazing.
That's the app
And it has been very
right
favorable, as Chris pointed out, for the
there.
overall equity markets. One company,
My
though,
FX
and
book.
it's by far the most important, at least in its weighting in the S&P 500, is Apple. That stock is still down about 1.4% this after, of course, earnings. Our next guest maintains his outperform rating. He has a price target of 240 and says the stock could be weak on headline noise, but he'd be a strong buyer on iPhone and services growth. Here he is, Dan Ives. Always good to see you, Dan. All right, why are you still a buyer? What about the iPhone demand at least seems to hearten you?
Yeah, well, I think when you look at it, the iPhone demand was actually strong, and even in China, and Cook called that out, even going to the December quarter. Now, China was weak because of Mac, iPad. What I view as more noise, the core, the bread and butter here. iPhone demand looks strong. Now growth's going to return. Services was massive in terms of double-digit growth, and the margin story actually continues to expand. So to me, the fictional narrative that the China iPhone
Order
demand
filled.
is going to start.
I'm adding to my NQ short. I'm in 2 micros now, short.
We're strong buyers here. I view it as really more of a table pounder going into the next 6-9 months.
Although I thought analysts were looking for as much as 5% growth for the next quarter, we're not going to get that. Is that a disappointment?
Yeah, and that, and David, to that point, that's really more Mac,
on,
iPad,
yes.
and FX. If you look
Let's
at
get this
iPhone
reliever.
units, that's actually in line with expectations. You're actually starting to now see growth. And the most important thing here, as you talk about so much on the show, it's about China. And the China iPhone story that Cook really reiterated last night, that remains firmly strong. And I think that's the important thing relative to Huawei, geopolitical, and many yelling fire in a crowded theater, that the Apple growth story was really in the rearview mirror.
That services number is pretty extraordinary as well. You know, give me a take on
And
that.
my stop loss on this trade is 40 points. All right, so my entry is 15.098. I'm in 2 micros short, and I'm gonna be risking only 40 points.
16 times where you sell it and continue to be head scratching to the valuation today. It's the services. I mean, services at one point was worth 150, 200 billion. We view that as 1.4 to 1.5 trillion.
Yes, I know
That's
we're gonna
100
do it.
billion
I know
annually.
we're
Now
gonna
going
do
low
it.
to
Come
mid
on, baby.
double digits, margin double the actual hardware business. Services is the key, and that's why.
Yeah, you gotta talk to us sometimes, you know. It's like, come on, man, act like I know at some point. I know at some point today we're gonna end up seeing like a nice 10-point drop. I mean, we're getting it now from the highs, but yo, given all this run up that it's done, man, come on. It's like there's no way you're not gonna at least retest 43, at least like 43.25. But again, there is that gap to the downside, so if I gotta like scale in later in the day and hold this, like
But Sarah, I just continue to focus on you own this for
I'm
three
catching
things.
that.
iPhone,
So we run up this week.
services,
Next week
gross
we sell
margins,
off. I'll
right?
take that.
Everything else.
But iPhone sales guide, isn't it?
Come
Well, when you look
on.
at iPhone
Come on.
sales, it's
There you
actually
go.
growth's
Go
going to
on
be
with
there for the
yourself.
December
Go on with
quarter,
yourself.
and now into March, it's going to be up 4 or 5%. I think the whole narrative was
Right.
iPhone growth hasn't seen growth.
There we
Now
go.
you
Come
actually
on.
will see it.
We got
And
2
most
minutes
important
left.
one here is the
We got
China
2 minutes
story.
left, man. If this thing can just break this bottom with that previous green candle, bro.
I just got back from Asia the last 2 weeks. Got back 2 days ago. It's a much different narrative that I'm seeing on the ground there than maybe the perception. I think these numbers reflect that.
Well, there are a lot of different data points. We kind of try to tend to ignore them, but in terms of what moves the stock from here, though,
Give me a
I mean,
second.
it is still up 34.6%.
There we go. Oh, come on. Yes. Not quite the the bearish engulfing candle that I wanted to see on the 50-minute, but I'll take it. I'm still holding my 2 micro short on NQ. Come on. There you go. Yes. Go on with your bad self. Solid, bro. Give me this flush. Right, drop down and get your eagle on. Let's go. Sushi for breakfast. All right. We need a lower high to form for me to scale in on ES shorts.
since January of last year. This all comes as the Fed held rates steady this week and upgraded its assessment of economic growth. Richmond Fed President Thomas Barkin joins us now to weigh in on all of it. We also have our own Steve Leisman, of course, joining us at Post 9 as well. Good morning to both of you. So, President Barkin, first impressions, looks like a pretty weak jobs report. What do you think?
Well, I've been saying that there's been this disconnect between the data we're seeing and what I'm hearing on the ground, and I really do believe in listening to what I'm hearing in the economy. What I've been hearing is normalizing. Labor market in better balance, supply's been getting better, demand's coming off, particularly in places like professionals. It's still hot in skilled trades. You still hear a lot of heat in skilled trades, but I wasn't surprised. Frankly, it was welcome to see that the gradual lessening that we've been expecting is continuing.
So does that mean you can be done raising rates?
Well, you went right to it, didn't you, Sarah? No, I'm not going to prejudge that. I value the optionality of seeing what we're going to see in the data, and in particular, we're going to get 2 inflation reports between now and the next meeting, and I think that's what's going to matter to me.
Well, it feels like you guys want to be done. Like you feel like you've done enough, right? And you want to see it manifest in the economy. Is that accurate?
What I'd say is we want to be done with inflation, but you want to trust that, but you want to verify that. So I'd very much like to see inflation continuing to come down. That's what I'm focused on.
Tom, I get to ask the Fed chair one question. So you have the opportunity here to answer the second question I would have asked him, which is, at least in the wake of the meeting, and certainly even before the meeting, the market has begun to price out an additional rate hike. Are you comfortable with how the market is priced in that regard, in the sense that, are you afraid you're losing optionality to come back and hike again?
Well, I'd like to think the market's responded to the data. And so what we saw today was data that showed a gradual lessening of the job market. I think that's what those who would like to not see another rate hike would want to see. We'll see what the inflation comes in. If the inflation comes in relatively hot, the market will react, I'm sure.
If it does come in hot, this idea of doing one more quarter point, it seems almost superfluous, right? I mean, if you have inflation that remains high, another quarter point ain't going to fix it, is it?
Well, you could say that about every one of the things we do. Is does 25 basis points matter or not? I do think the notion of expectations matters a ton. And if you're going to not respond to inflation when it shows elevated, I think expectations will respond to that. And so I'm not sure 25 basis points in the end is the answer to all the world's problems. But I do think if you're going to take care of inflation, you've got to respond if it shows up.
You want inflation to be over. How will you know when to declare victory? So we're at, what, almost 4% on core inflation. You want it to be at 2%. You're not going to wait all the way till it goes down to 2% till you say you're done, right?
Well, I'm focused very much at this point of trying to understand the behaviors of price setters. And if you go back to 20, 30 years, price setters have been beaten up by the combination of e-commerce, globalization, access to new supply, and the power of big box retailers. And if you go to 2018, 2019, you talk to those folks, you found people who really weren't into raising prices, didn't think they had the power to it. I'm out there talking to price setters now, and there are some who've taken a step back and said, okay, we're on the backside of this. Apparel would be a good example of that. But I still do talk to price setters who are looking to get more price. Look at the big consumer products manufacturers. They're interesting to look at their earnings. 2019, 2018, price up 1 or 2%, volume up 1 or 2%. In the midst of the inflation era, price up 12, 13, 18%. Volume pretty steady. You're still seeing price of those big manufacturers up 7, 8, 9, 10%.
So far, this 15-minute candle right here is a lower high.
You know, they're no longer taking outsized price increases because they're worried the volume in the market won't sustain it.
What are you saying? Let's say you're at a dinner party, and I can't remember a dinner party where real estate didn't come up. Are you roundly hated because of what's happening in the mortgage market right now? And do you think it's gone too far in terms of 8% mortgages? Are you leaning too hard now on the housing market?
Well, I go to dinner parties with old people, and old people say, I remember when I used to pay X% for a mortgage. That's the world of dinner parties. I think the housing market, there are a set of people who do want to buy into a house. I do think they're increasingly frustrated by lack of access. I think the home builders, the big home builders, are still building at scale.
There
And
we
so there are
go.
markets
All
of
right.
mine, like North
Back
Carolina,
in
where you're still
profits.
seeing a lot of home construction. But in the places where you're not seeing it, you not see that frustration.
If
I think the broader
Nasdaq
commercial real
can
estate
get
market is the
below
place where they're not throwing any parties right now. And there's a lot of
15,
noise in that
again,
market.
15.15, if we can get a break below that, we could see a nice slide all the way down to 14.850. But if it continues playing around here, I might just lock in profits and then look to rescale back in. Yo, give me 1 second, bro.
You're hearing your business context.
So what I'm it continues, there's lots of
And
reasons
I
to
had
think it might,
another call
as
come in.
people figure out how to do more with less. But we'll have to see whether.
Do you think it's related to AI, even
gonna
in
be
these
an all
early
day
innings?
thing.
I think it's too early to give credit to AI. But I would give credit to people in a tight labor market innovating and thinking about how to deliver for their customers with somewhat fewer workers.
There
You
you
briefly
go.
mentioned commercial real estate, as least as being, you seem to indicate it, as we all know, a potential problem. I'd just like to get a little bit more from you on that. How big a problem do you see it? I think 2/3 of commercial real estate loans are actually fixed rates. So the 10-year moving a little down in yield is a bit of relief. But overall, what are your expectations there?
Well, you have to take commercial real estate apart. So industrial's doing fine, and retail's actually
go.
doing
It's office that obviously is under the most
Come
pressure.
on,
really
baby.
B and C
Come on,
downtown
bro. We
office where
get
people
this
are
break
back to work. And I
below
do think that's a trouble sector. It's a bit of a slow-moving
43.60.
train because individual owners
Come on.
have
Oh, there we
choices
go.
as to,
Slide, baby.
when to
Slide.
sell and how to sell,
Slide.
give
Oh,
it back to the bank or
Nasdaq.
not. But
Yes.
everyone I talk to
Yes.
from banks to
Yes.
real estate things think that's a
To
segment
take
that's gonna go
profits or
through
not to
a
take
set of
profits.
challenges.
If they can avoid it.
I don't think they ever have.
No.
Right. And so there's a set of challenges that we're going to go through there. I don't think this is an unknown challenge. We've had commercial real estate things before. The banks, I hope and expect, to have the capital to get to the other side of this.
So you will be a voter next year on the
Yes.
committee. How are you going to determine?
Do I take the
when-
$1,600 or do I not?
Seems like that's still a ways
I'll
off
wait.
in my mind.
I'll wait.
But what I'm looking for in the first instance is for inflation to settle.
I'm like, yo, decision. Do I do it? Do I not?
12-month, as has been happening. I like it when that continues down, and I hope and expect we'll,
Uh-huh.
continue progress on that next year. Demand matters as well. If you see really high
Yeah,
demand,
I'm
it's
just,
hard to
I'm like,
make
yo,
the case that
I'm
that
up,
vibrant
I'm up a
demand
little over
is
16
helping
right now.
inflation slow. So that's another thing to watch on. You can imagine scenarios where
40?
demand comes off and you have to do something. You can imagine scenarios where inflation starts to settle and you want to lower real rates. Both of those imaginary things still feel pretty far out in the distance to me.
Yeah.
When it comes to lower rates, I'd just love you to respond to something we heard earlier this week on CNBC from Jeffrey Gunlock of Double Line Capital. He's one of the more important voices in the bond market. He basically posited a thought that the Fed is ultimately going to be forced to lower rates because to do otherwise, given the refinancing needs of the U.S. government, we're going to be running $2 trillion interest costs within 3 years. Is that a real factor that you think about?
I think we're just trying to get inflation under control. I'm not spending time thinking about government.
At all. So it is possible, therefore, if rates were to stay high, that the U.S. government's budget would be basically eaten up by interest costs.
I think the size of the deficits we have now is something that's getting a lot of attention and should get a lot of attention. And of course,
I
if you
took some
reduce them, you'll
profits.
reduce,
I
the
closed out
interest costs,
half.
but we'll see.
So I'm now down
the
to
various
just
legislators
20 contracts overall.
When we do our Fed survey, we did a grading of power.
I'm gonna move my stop loss to break
and we
even.
asked people to grade him on different things, and he got a D
We
in
ain't playing
economic
these
forecasting.
games.
You guys missed.
Hell yeah, on a Friday after all of this?
in terms
Nah.
of how you ran
Nope.
policy.
We ain't
Is there
playing
a
no
reason
games.
to
We
have
gonna
any
lock in
confidence
some
now that you're gonna get
profits.
it right on the
Oh,
other side?
come on.
Well, hopefully you don't do a grading after
So
this.
ES played out beautifully. Pop created a lower high. If you guys took it, great. If you didn't,
If you look at
it's not a bad place to start scaling
I didn't see
scale in,
inflation,
to be honest.
persisting for nearly as long as it's persisted. I did see the risk of
But maybe you might want to wait for another rejection of below. You done for the day now? Hell no, I'm not done for the day. I still got one more position left on NQ. With my stop loss at break even. And I want to catch ES, man. I see that ES is potentially gonna come all the way back down here, at least to 43.40. And I want that smoke, man. I want that.
Going back to what I said before is that
And besides, it's only 10:30, so
didn't think
let's
raising
see.
price was a lever. If you're a
Just
business, though, raising price is your most valuable lever. It's the quickest way to make money as long as your customers don't go away. And so I think all of a sudden it became clear to price setters that they could do something. And they're not going to give that back without competitors or customers.
It's Friday, so I'm not even gonna rock with this. I'm gonna
On the other side,
close
I'm trying
out
to pay
my
attention to these same people.
ZL.
And what I'm hearing is it's going to take a while
Let's
for them
take
to
a
come
look
back
at
to the
LA.
benefits.
Retain your yield doing your work for you.
Action, HE,
Financial conditions
not
help
much
do what we're
action.
trying to do. We try to
Freaking
do our
Tesla's
rate
up.
moves, affective financial conditions. Financial conditions
Nice
affect
4
the economy.
points, bro.
So long as financial
I
conditions
messed
are
up not
affecting the
picking this
economy
up.
in a direction that takes us in the right way, that
All
helps.
good,
But
all
it's
good.
not really a policy
Okay,
area.
alright,
It's pretty
now
volatile. We don't control.
Let's see what
Yellen took
ES
some
does
incoming
here.
this week from Stanley Druckenmiller for not issuing more long duration when rates were lower. She responded last night by saying that actually portfolio duration is the longest it's been in decades. Do you take a side on that debate?
I'm pretty clearly not going to take a side.
Order filled. Re-adding to my NQ short the contracts I took off.
I don't know which rates you're talking about, but
Fed's interest rate and market interest rate.
I don't know.
I'm just asking in a different way.
Yeah, okay, no. It depends to me exactly on what happens to inflation. And I'm watching that closely, and I'm very hopeful that we're nearing the point where we can get it under control, but the markets will tell us that.
Is there a big disagreement inside the Fed right now between those that are worried about inflation sticking around longer and having to potentially do more and those that feel like they're done?
The great thing about our committee is you get a lot of views at the table and people take those. I think it's a consensus-oriented committee, though, as you've seen from the votes over the last
Get it, bro.
couple of years. And so everyone puts their view on the table. We kind of work it out. And I think we've so far been able to come to a pretty strong consensus.
Let me ask it another way. This is a great question that Sarah asked, which is, do you have to be convinced to hike, or do you have to be convinced not to hike?
All right.
I don't prejudge the answer, as you know. We've got a meeting in 6 weeks. I think we just got out of the last meeting. And so, I'm saying we got out of the last meeting. Let's get 2 jobs reports. Let's get 2 inflation reports. Let's
My
get a
stop
consumer
loss is
spending
still at
report. Let's see if the things that I think I
15,098.
believe
We're
today
getting close. I
are
might
still
get
true.
stopped out
And so
here.
I think we've got a lot of time.
All right, one more way. Is there over tightening or under tightening right now?
They're both big risks.
You know
They're
what?
both big risks.
Sure. And by
And
the
they're
way,
more in balance.
there's also a risk that some boulder comes in from left field and takes on the economy in the way that the pandemic did. And so you're always dealing with under tightening risk, you're always dealing with over tightening risk, and you're always dealing with the risk that perfect policy can get waylaid by something that comes out of
But
left
speaking
field.
of boulders, we haven't asked and you haven't brought up geopolitical tensions. Is that not something that's high on your list now of risks out there?
Well, when you start seeing a conflict in the Middle East, you start
Come
thinking
on,
about
there you
oil
go.
prices.
Get down
It's
there.
very
Get
familiar
down
for those of
there.
us who lived through the 70s that an oil price spike has issues.
If I can't get a 30-minute candle close below 1550,
But yeah, you constantly
I'll
monitor
call it.
And I've been pleased.
I'll call it
that
probably
so
until like the
far it hasn't
afternoon,
really spilled into
maybe.
that part of the economy, but that's absolutely something to watch. When I talk about boulders, that's a classic example of a boulder.
Someone short the down.
You did well, 4 on 1, not bad. Tom Barkin, thank you very much.
Good to be
Really
here.
appreciate
Thank you,
you
Sarah.
coming and sharing sharing your views and what you're hearing. The president of the Richmond Fed.
Coming up after the break, Goldman's chief economist Jan Hatzius will weigh in on the jobs number and some of the comments we just got from President Barkin. We'll get his take, obviously, on productivity, bond duration, and a lot more of the topics we've been discussing for the past few minutes. We're back
There we go. There we go. All right. Copy that. Copy that. Let's go. Let's go. Listen, man, feel free if you are short NASDAQ with me on the micros, feel free to move your stop loss to break even, or feel free to lock in profits. I don't know how many contracts you guys went in, but I'm in a total of 40 contracts. So I will lock in. I'm going to put my stop loss in profit. So I'm moving my stop loss down to 15,085. Matter of fact, I'll make it 82. So if it comes back, I get stopped out. I don't mind. Probably should take the one off. There you go. Go, baby. Go, go, go. Who's in it with me? Can I get a show of hands? Who is in this short with me? Anyone entered ES? Y'all really quiet on the stream. It only took us until 10:30. Let's go. Oh, yes, ES. Yes, ES. Ooh, go, baby, go. Oh, you break 60, man. I'm going to just kiss you. Okay, there we go. 1, 2, 3. Holding some shorts. Beautiful. Let's go. Be sure. And again, if you're trading the micros or if you're trading the minis, once you get into some decent profits, be sure to put at break even, or again, take some profits, because there's still the chance that as we get closer to the London close, we're going to get another reversal pop and then continuation. So if you can snag 5, 4, 3 points, take that and then look to scale back in and so forth, which right now on this NQ short, I think I'm going to lock in some profits on it. Come on. Oh, baby, just break 60, man. Break 60 and we home free. There you go. Yep. Come on. Oh, ES is coming. Oh, she coming. Come on, baby. Slide for me. Slide for me. Like slip and slide. Slip and slide. Let's go. Let's go. My man, Ryan. That's what I'm talking about, bro. Yes. Let's go.
Trial now. As you just saw, Richmond Fed President Barkin talking with us a few moments ago, saying he'd like to see inflation continue to come down before deciding on ending rate hikes. Also said we're still a ways off from cutting.
Come on,
His
break
comments come as
60.
the jobs report
Listen,
today
this thing,
posts
once this
smallest
thing
gains
breaks 60,
since
man, we
June,
should see
150K.
a
Goldman Sachs
nice
economist had
slide
research.
down to the
Odds is a push line
50s.
to go through both of those things.
Maybe
Now,
down
good
to the
see you.
40s.
Wonderful to be here.
Undercut
Come
almost
on.
every expectation
Oh,
on the street.
let's go. Damn, yo,
Just
dog.
talk to me about the print.
I thought it was broadly weaker than what we expected.
I'm about
and
to
I
kill
think
this
if you look at
this
the reaction of the
NASDAQ
bond
short,
market,
because
clearly weaker than what the market was pricing in, and I don't think it was weak in a very concerning way.
there's like no
We
real
still
follow
printed
through.
150,000 headline payrolls. You know, a little over 180,000
Okay, yeah.
if you add
I'm out.
back the strikers.
Stop on
and
NQ short,
also the
got
dollar
hit.
was down
I'll
a
look
lot,
to
but if you
rescale
adjust
back
it for the
in, maybe a
definition
little
of
after
payrolls
the
where
London
actually up somewhat.
close.
So it was a
And
softer
again, those of you
report,
that got
and I
short
think
on ESC, this is
underscores
what
the
I'm talking
message
about.
that the
You
market
want to
took
take
out of
profits
the
once you have
FOMC
it,
meeting this week.
just
I think
because it
the
can always
Fed
pop
is
back
very
up,
likely
and
not hiking,
you can get a
but
second
I
entry, right? So lock in the profits instead of going back to break even or maybe losing profits and then look to rescale back in. And if you're trading the minis, once you've locked in some profits, start scaling in with the micros. It's just going to give you a better opportunity to manage the position.
we think that inflation is going to
Let's
continue
go.
to come down gradually, but we still have
Alright.
a little above 2% in the fourth quarter of next
Alright.
year. And so I would agree with the idea that it still will be a while before the Fed is going to start cutting in our baseline forecast. However, what I think is very important is that they can cut if things were to weaken more sharply. That is now an option. That is an additional insurance policy against a recession that wasn't available 6 months ago or 12 months ago.
We mentioned a lot of the weak spots in the jobs report, but you're right. I mean, it's not like the labor market is collapsing. We still, as of September, had 9.6 million job openings. We still have historically low weekly unemployment claims filed by Americans. I think 1%.
Yeah, bro. It's like, yo, it's playing, man. It's playing. That's why I was like, I'm like, take profits or not. Yeah, let me lock that in, man. Let me lock those profits in.
It's a tight labor market, but it's becoming very gradually less tight. It's moving into balance more. You're right that the job openings numbers over the last few months have been more stagnant, and that's true not only if you take the JOLTS numbers, but also some of the bottom-up numbers. So it's still a tight labor market, no question, but in much better.
Yeah, same here. Same here. Just
another indicator you
play this until we get what we want.
Also in the JOLTS report, that's at the level that it was at in February 2020, and I think that also says, it's still a strong labor market, but not as sort of outsized tight as it was a year ago.
So this all feeds into your view, and I think the Fed's view that the work is being done, inflation is coming down, growth is slowing, but not recession. What would cause you to get a little bit more worried about the downside risks as we do start to weaken here?
That's right. It is consistent with that baseline view. What would make me more concerned? I mean, obviously, you always want to respond to high frequency data. I'm not seeing anything particularly concerning there. What are potential concerns? Well, conflict in the Middle East. You do think about oil prices. The economy is less sensitive to oil prices than it used to be. U.S. in particular, because the U.S. is now a net exporter of oil. But that's something to watch. And I think the adjustment to a more normal real interest rate environment after 15 years of very, very low real rates. I mean, we are still in the process of that, and so that could certainly cause some adjustments. Housing is an obvious place where we probably will see more weakness. Commercial real estate also already came up. I do think that's probably more of a multi-year adjustment, but those are the things to watch.
Barkin says cuts may be a long way away. Powell says he's not thinking about it yet. When does the first cut happen, in your view?
Again, in our baseline, it's the fourth quarter of next year, so we don't have any cuts for a year. But if you look at the risks around that, I think they're mostly tilted to the downside. Very hard for me to see how you get a material amount of additional hikes. But it's not that hard to see how you could see cuts if things came in somewhat weaker.
Yeah, swaps are talking more like June.
Shot call in case you act up, you get zapped out here.
Yes,
Play with me.
Swaps would also be would reflect the probability
Dude, relax.
path, which for me would also be an earlier cut, just because they are downside.
I need my hands. I gotta, you know what I'm saying, enter positions, you know what I mean?
Q4 GDP, did you go to 1.7?
Yes, we lifted that in part because we're no longer building in the government.
If you make me miss entering an entry, I'm gonna put you outside.
It's looking a little bit firmer. The auto strike having been settled also helps at the margin. I would say 1.7 is still far below 4.9, and the 4.9 does look like an outlier to the high side.
Chill out.
Nice to
Get
see some
off
of
my
your
desk.
puzzles, though, get paved over here for
Bro.
We're not calling it a speed bump.
A speed bump. Jan, thanks. Good to see you.
Thank you very much.
I need my hand.
Well, still to come, we're
Relax
going to
yourself.
talk about Sam Bankman-Fried.
I gotta press some trades. I gotta make some money.
7 criminal fraud counts against him. As we had to break, though, check out shows a block. This after the payments company topped estimates on earnings and revenue, also raised its full-year guidance. In addition, announced a $1 billion buyback, and that is having a positive impact on those
See him right there. Okay. Righty, yes. There you go. Relax yourself. He got that little man syndrome. Half Pomeranian, half Chihuahua, and you know how them Chihuahuas be. They swear they the biggest, they the biggest thing outside, bro. You'll be barking at big ass dogs, and then as soon as the dog looks like, yeah, like has to be picked up, like yeah, fake ass, because you know somebody's gonna hold you back. I'm like, yeah, bark. Not my choice. Nope, I didn't select this dog. Nope. Do 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 do. Time. Where is the follow through? See how this 4 hour still looking, still overbought. Oh, yo, 4 hour looking like a reversal candle.
Expense tab 2. Welcome back to Squawk on the Street. So a jury has found Sam Bankman-Fried guilty of all 7 criminal counts against him. And now the FTX founder faces a maximum sentence of 115 years in prison. Let's bring in our Kate Rooney, along with Eamon Jabbers, here to discuss, Kate, about what happens next and what will determine how much he gets.
So one of the big things we're waiting for is sentencing. That should come at the end of March. But then there's also this other criminal indictment about campaign finance violations. We heard a lot of the evidence in this trial that was related to that. So it could actually play into sentencing. I was just on the phone with a legal expert who said that Judge Kaplan's sentencing could also take that into consideration and say that it's relevant evidence and that would potentially add years to the sentence as well. The max sentence is 115 years. But we heard from some of his top lieutenants who testified that he took customer money and some of that was spent on campaign finance and done illegally and done in ways that hid where it was coming from and hid some of the.
And those are separate charges?
Separate charges, but the evidence, we've already gotten a lot of what we would theoretically hear in this other trial.
Amen. What part of it are you following? You've covered a number of these court cases and some of the legal ramifications as far as what happens next.
Yeah, look, this I think is the beginning of chapter 2 of the crypto story, right? Chapter 1 runs from 2009 until yesterday, right? It's this gradual run up and then really shocking run up in crypto valuation during the pandemic, ending with Sam Bankman-Fried's fraud and now conviction. And then the question is, what is chapter 2 going to look like for cryptocurrency going forward, right? How will the crypto community sort of build a business that strips out some of the sort of larceny that's been a regular theme of crypto going back to the days of Silk Road and through Sam Bankman-Fried, and now into a world where they can say this is an asset class built on something that's real, that has a real business model, and to make a use case for crypto that's something other than just an investment based on the greater fool theory. They have to build a use case that says this is a useful tool to solve a problem in the real world. And I think there's a lot of pieces of this technology that ultimately can do that. Blockchain is a pretty compelling technology. The idea of a public ledger is compelling. There are a lot of business ideas floating around out there. But nearly 15 years into the story of cryptocurrency, we don't have real world applications where this is being used in the real economy as anything other than a speculative asset right now. Chapter 2 for crypto is going to be solving that problem, building it into the real world.
Well, there is always the terrorist financing. I know that's been a big story, Amen, in the last few weeks, trying to go after Hamas accounts.
Sure, absolutely. Look, crypto has been used for all sorts of illicit financing. And what we've learned over the years is that, law enforcement, if the problem is big enough, if the amount is big enough, or the terrorist target is big enough, law enforcement can track this stuff. It is not anonymous. It is a public ledger. They can pull the threads on that and figure out where the money is going. So it's not useful necessarily as an anonymous spending tool. It's not really a currency at all in the sense that you can't go out and buy hamburger within the real world, right? So what is this asset good for is a really sort of open question at this point in the history of cryptocurrency.
I'm gonna
And I
try
think there's a lot of
NQ
entrepreneurs and
one more
geniuses
time.
who are going to be thinking
15
about that.
100 even.
It's
Let's see
powerful,
if I can
compelling
get a
technology,
fill.
but the question is, how are they going to apply it in the real world for something other than some of these nefarious things that we've seen throughout the history of crypto?
Kate, speaking of sort of the crypto ecosystem, you know, Binance figured pretty prominently towards the end there in FTX's collapse.
Yeah.
Stop
Where are we
loss
right
will
now in terms of
be
the view of that,
15
exchange
140.
and its leader?
The view has been that there may be a DOJ issue around Binance. They had to shut down their U.S. business. So there's absolutely been a trickle effect here, and it's hit Binance. They've had to close some of their accounts, and they really were a big part of this story. They were brought up consistently within the trial, and it's hit the credibility, especially of offshore accounts. I think it's helped Coinbase in a lot of ways, that's really the regulated onshore U.S. business, although they've got issues of their own with the SEC and they're facing their own legal battles. But I think anything offshore for a U.S. investor, people are going to be thinking twice about some of the disclosures, auditing, some of the finances, and it has absolutely hit that business as well. But it's really shocking to the extent to which investors are shaking this off and kind of shrugging this off. Got Sequoia, big time investors who were here and said, oh, kind of good riddance, that's taken care of. We're still investing in the space and we're still optimistic and bullish, which is kind of fascinating. You're not seeing more of a moment of this reckoning and kind of thinking back. It seems like people want to move forward and kind of shove it under the rug and forget it ever happened.
That due diligence, don't worry about that.
Exactly.
I mean, Eamon, to that degree, I mean, Bitcoin's up $5,000 in a few days on the hopes of some of these regulatory approvals.
Yeah, sure. But the question of what Bitcoin is for really hasn't been answered yet, other than speculation, right? So, it is having a rally right now. It is having a moment, not nearly to the highs where it was. But I think if you look at this idea that Kate was just hitting on, of the Silicon Valley investors here, the Wall Street titans and big prominent names who flew to the Bahamas to get right next to Sam Bankman-Fried, the politicians who took the donations from Sam Bankman-Fried, the celebrities who took enormous amounts of money for very little work. There really does need to be some soul searching in all of those camps right now as to why we did this and were we enabling this fraud just by our mere presence, giving legitimacy and propping up this guy. And is that going to happen again? I think that's the big question. How do we stop that from happening again? And it won't stop unless there is some soul searching in all those places. Silicon Valley, Wall Street, Washington, Hollywood, wherever celebrities and sports executives live, all of that needs to be thought through.
Is he allowed to still tweet?
He's lost that privilege, yeah.
That privilege is for that.
And did he say he could not remember if he offered to pay off the Bahamian national debt?
He did. $11 billion of national debt. And I was thinking back to a conversation I had with Sam Bankman-Fried when he was out on bail at one point before he got his bail revoked. He told me this was on background. It wasn't really recordable at the time, and we just didn't think it as newsworthy.
Finally gonna break 60.
We were trying to get him to do this on-camera interview. He told me he would rather be in jail with a computer than out free in the world without internet access. So for someone like Sam Bankman-Fried, who lived his life online, the worst punishment you can think of is to not have internet access, truly.
Kate, Eamon, thank you guys. Wrapping up truly remarkable period, at least in finance in that degree. Another busy day of earnings. Meantime, to wrap up the week of trading, Apple shares still dipping below or lower after posting 4 straight quarterly sales declines. Dom Chu is tracking some of that fallout today. Hey, Dom.
All right, so Carl, Apple down, like you said, just about 1% or so right now. Holiday concerns, weakness in China also weighing on that stock. The business, by the way, in China down 2.5%. It came in below analyst estimates. So if you take a look at some of the supply chain fallout of what's happening there, it seems as though we're shrugging some of those off right now. Skyworks, Qorvo, Corning, some of those names tied to the Apple supply chain, all moving higher, perhaps on a broader macro narrative tied to the jobs numbers this morning. Shares of Fortinet also sinking to a much larger degree right now, down about 17%, just off its session lows, missing the mark on quarterly earnings, revenue, billings, and guidance. Cantor Fitzgerald, Stifel, among those downgrading the stock to neutral from overweight, lowering their target prices on this. The firm citing product headwinds and some of that messier outlook. Other names in cybersecurity, though, mixed today. Palo Alto, CrowdStrike, you can kind of see here, both lower. Okta moving up about 1% or so. And then on the travel side of things, Expedia, Booking Holdings moving in opposite directions. Expedia surging up by about 16%. beat across the board, posting record-breaking revenues. The company also announced a $5 billion stock buyback. Booking Holdings, meanwhile, trading lower despite beating estimates. The company saw increased marketing and personnel spending, plus higher cancellation rates. CEO Glenn Fogel, by the way, remains optimistic, citing strong growth for a record summer travel season coming up, Sarah. But those shares down about 1.25%. Sarah, I'll send things back over to you.
All right, Don, thank you very much. Coming up in the next hour, speaking of earnings, the CFO of Block will join us. The fintech stock soaring on the back of its latest earnings and outlook, what it says about the consumer. That's at 11 a.m. We'll be right back here on Squawk on the Street. Down's up
All
131
right,
points right now.
7 minutes before I jump off, ladies and gentlemen, I'll probably end up closing this. I'm probably just going to take this profit on NQ and probably come back later in the day once London has closed. Remember, London's not going to close until 12 p.m. Oh, what's up? Que lo que? Dímelo. Dímelo, papi champú. Oh, finalmente. Oh, okay. $60 broke. Nope, 61. Nope, we're below 61. Yes, I'm in 40 contracts short on NQ at 15,100. I'm looking for a break below 1550. I might just lock in profits here. I'm just not liking this back and forth. Yeah, I'm not liking this, so now I'm gonna do it's like
Order filled.
all right, I'm out of 40 contracts short on NQ from 15,100. If we pop over 15,120, or at least maybe a pop to create a lower high, I will monitor this to see if I can enter again. But yeah, for now, I'm just not liking this movement, so yeah. Possibly. Well, let's see. Yeah. I'm so shocked. Yeah, and again, the hold on the market right now is probably because the London market still hasn't closed. Normally, London market would be closing about in 4 minutes, but because last Sunday their time went back, it's 12 o'clock today. So as of Sunday, like starting Sunday, it'll be back to the regular time where London will close at 11 a.m. Eastern.
Jeff Bezos posting on Instagram last night that he's leaving Seattle after nearly 30 years. He's going to move to Miami to be closer to his parents and his rocket launches over there in Cape Canaveral. But he's also going to save a fortune in
Sunday.
Last year, Washington State passed a new tax on capital gains.
No, our time goes back or goes forward. Goes back. Yeah, our time goes back on Sunday. Bro, they need to stop with this shit, to be honest. It's like, yo, like leave the damn time as it is and that's it. Or if you're gonna change it, everyone should change it at the same time. They coordinated everything else. Like barbershops universally. Bro, barbershop universally are closed on Sundays everywhere, bro. I was shocked as hell. Sunday or Monday, whatever like day that they're all closed, like they were all like, I was in the Middle East and they were closed. I'm just like, what the hell? In Turkey? Yeah, bro. I'm like, yeah, I thought it was just a US thing, but nope. And then the colors are red and blue. And it's just like, yo, why is everything like coordinated? So they should coordinate this shit too. Like, you're gonna change back the time, change it all at the same time.
with Sarah, and I'll leave the rest of the
What?
show with Sarah and Carl. Have a great weekend, everybody. Squawk on the Streets back.
Mm-hmm. 12. Yeah. 12 p.m. Because right now it's 2:53. It's 2:58 p.m. in London right now. Four o'clock. No, R11. No. Before hour 11 was there 4 p.m. R11 now is there 3 p.m. So they have one more hour to go. Yeah. Right, yo, that's the shit about this. It's like, yo, it's mad confusing. So like, if you look at the world clock, right, right now in London, it's 2:59 p.m. Their market closes at 4. So they have one more hour to go before their market is closed. But you still get like a good volume around this time either way. But yeah, so what you were attributing to like to the 10 o'clock before for us, like we would have like a lot of volume. It's changed to where like it's much later now. Yeah, it's 11 and then it'll fully die out at 12 because they close at 12. Yes. Yes, sir. Correct. Mm-hmm.
Order filled.
I'm reshorting NQ. All right. I got filled at 15,114. I'll add if it pops a little bit more. As long as it doesn't make a new high, I'll hold. But if it makes a new high, I'll close it out.
Happy Friday. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla live from Post 9 at the New York Stock Exchange. A lot to get to this hour. A Goldilocks jobs report. Economist David Rosenberg here with a breakdown of today's numbers and what it means for the Fed as the debate over a December hike continues.
Plus an earnings triple play. First up, cash. Block CFO with us with a look at the company's blowout quarter and the future of fintech.
Then the consumer, the CEO
Let's
of Restaurant
Let's go.
Brands on
Beautiful.
spending
Ooh,
trends,
beautiful
inflation,
entry.
and trying to reclaim
Beautiful
the
entry.
domain
Keep
that
it
we're
going,
in.
baby. Keep it going.
CEO of Microchip on the state of the sector.
11 o'clock. I'm gonna stay on until I get out of this trade. I still want sub 15 50s. It's either that or it pops the 40 points and I take the L.
Down more than 26 basis points in the last 5 days. We're down into the 4.5 region on the 10-year yield. Carl, every sector is higher right now except for energy.
Significant loss of momentum, which is, I guess,
Green. 40.
In the third quarter. The Atlanta Fed, I think, really kicked things off, Sarah, cutting its number down to 1.2 for the fourth quarter. So if you believe that number, you had to believe that employment was going to follow suit. So today's number didn't surprise me. I think the downward revisions really help explain why we had that outsized, but really what proved to be an artificial run-up in the previous 2 months. But I think that the economy is losing momentum, and I think that the people that threw away the recession call in the garbage bin because it didn't happen yet are going to be putting that call back on in the opening months of next year.
Not yet. I mean, we talked to Jan Hatzius in the last hour. We talked to Tom Morgan of the Richmond Fed. There is still a feeling, and I think you're seeing it in the market too, and certainly in the equity market, David, that the economy can come in for a soft landing. If the Fed is done raising rates, and we continue to see progress toward a weaker economy, lower inflation, that doesn't necessarily mean we're going to head into recession.
That's today's narrative. Firstly, the recession always start after the Fed is finished with its tightening cycle. The recessions don't usually occur while the Fed is still tightening. And so those are the lags. And actually, I think those of us that were wiping eggs off our face because we were calling for a recession a tad too early, it reminds me a lot of what I was saying back in 2007. I was early to a fault. But the recession came in December of that year. I mean, to say recession is not going to come after the most pernicious tightening cycle since 1981, to me is a low odds bet. The reality, when you look at the historical record, is this: the recessions actually start 2 years after the Fed's first rate hike, and the Fed's first rate hike was March of 2022. So that puts a bullseye on this business cycle in the first quarter of next year. So yeah, I would say that we're building up towards it. We've been in a soft landing. I don't think a soft landing is a permanent state of the economic cycle. The soft landing, which can last a year, and we've been in a soft landing, but the soft landing historically is just a bridge between the economic expansion phase and then the contraction phase, which I think will be next year's story.
You remind me of Deutsche today, David. They write, we've been in the hard landing camp for almost 2 years. That said, the economy's been resilient. If we get through Q4 and Q1 without it occurring or pointing that way, we have to question whether our indicators are relevant in this cycle. Would you agree it has to be done in the next couple quarters?
I would say that 100%. That if we don't start seeing it by the first quarter, then I guess we'll all have to just pen a report called "The Business Cycle's Been Repealed and Interest Rates Don't Matter." But the reality is that it's like back in 2007. I'd be on your show and battery extended because of mortgage equity withdrawal and cash flow refinancing, the last vestige of the housing bubble, and that kept the consumer going until it didn't. And remember, the recession started in December 2007, and not even the Fed saw it. And really, only me and Dick Berner on Wall Street actually were calling for a recession back then. And this time around, the lags have been extended because of the last vestige of the fiscal stimulus that was unveiled back in March of 2021. But the reality is that, as Powell keeps on saying, these things operate with lags. I was very encouraged today. I guess if you're saying, why would the stock market rally and the bond market rally? Well, I think that both markets just love the fact that the wage number at 0.2 and the 3-month trend is getting down towards 3% at an annual rate. And we got the unit labor cost number. Nobody talked about the productivity. Unit labor cost number in the third quarter, negative 0.8 sequential. So the big concern that we're going to have this wage price spiral with or without UAW strikes or other strikes, the wage numbers are actually decelerating very nicely. And I guess you could argue that's good news for both asset classes.
But couldn't you also argue, David, that the consumer is just not showing signs of going into recession? I mean, there still is a healthy demand for labor. There still is a historically low amount of Americans filing for jobless claims each week. And then if you listen to some of these more, and you could say that's lagging, but if you look at some of the more real-time indications from companies we're getting on earnings, and I know a lot of them are in the services sector, but just today, Live Nation and Expedia and even Starbucks, and we're going to talk to restaurant brands in a few minutes here, but Nobody's talking about a consumer that's falling apart. They're talking about strength, and maybe they see some weakness in the low income cohort,
Hey, what's
but
up?
nothing broad based.
Yeah, I'm about to jump off. Why?
Something you didn't mention that we could throw into the mix. And then
Isn't it for 12?
next few weeks,
Oh, it's 12. It's 12 their time.
at Target and Macy's, and I think that their guidance is going to be very important. But I would ask you the question that if you're right, that the consumer is in such great shape, and we're going to have a terrific holiday shopping season, and then
All right, let me hop off stream and
no retail sector employment growth
all right.
this past month. I mean, there was no growth in retail employment. So the retailers might be telling
All right, guys, that's it for me. I'm still holding my Nasdaq short. I'm looking for 1550. I'll probably add to it once I see. I'll probably add to it because it's still creating lower highs, but I gotta jump off. I got a meeting with some people in London. Catch you guys later. Be safe, don't overtrade, and Charting Queen, I'll call you after I'm done with this meeting, okay?
the saving trade